President Trump's bold vision to eliminate income tax deserves our attention. Why should hardworking Americans be taxed to enrich foreign nations when we could instead be tariffing those nations to enrich our citizens? This isn't mere speculation. Congress is actively advancing the Fair Tax Act of 2025, legislation that would abolish the IRS entirely. Their own press release confirms it would eliminate the need for the Internal Revenue Service. To replace this system, Trump is strategically developing the External Revenue Service, IRS. This transformation could fundamentally reshape America's tax structure. Let's focus on the financial reality of this proposal, because the implications for your wallet, regardless of your politics, could be extraordinary. The IRS, which receives around $4 trillion in revenue annually, is in charge of implementing and upholding federal tax rules. It is undoubtedly among the most potent branches of the American government. However, the IRS is also seen by Trump and other detractors as an overburdened bureaucracy that is prone to inefficiency, overreach, and occasionally a lack of accountability. According to Trump, the tax code in the United States is excessively complex, necessitating whole industries focused solely on tax preparation and consulting. He has called the IRS a representation of the government's encroachment on the lives of Americans. In place of income taxes and the IRS as we know it, he and his congressional allies favor a shift to what some refer to as a fair tax or a flat national sales tax. However, there is a wide range of views on doing away with the IRS. Advocates believe the agency is irreparably flawed. One Texas small company owner who supports Trump said, "I spend hours just trying to make sure I file correctly every year. So much time and money would return to the economy instead of fighting paperwork if the IRS vanished." Stories of Americans recalling mishandled audits, perplexing tax letters, or misplaced refunds are common on social media. Their opinion of Trump's speech is refreshing. They contend that less bureaucracy, lower administrative expenses, and, in theory, fewer opportunities for focused political enforcement result from a more straightforward tax structure. A universal sales tax, according to its proponents, would be more transparent because everyone would only pay a certain percentage of their purchases. However, the opposition is outspoken and has serious concerns. Removing the IRS, according to its detractors, would be disastrous and logistically impossible. An Ohio accountant asks, "Who's going to collect the trillions necessary to run our highways, our military, and support Social Security?" Many comment on forums and news interviews that the majority of developed economies use comparable agencies. Regardless of the structure of taxes, an administrator is needed for tax collection. Opponents also point out that lower-income families will probably be the ones most negatively impacted by a sales tax. Poorer Americans always spend a larger proportion of their income on taxable goods, even though everyone pays the same rate. According to a professor of economics who was interviewed by local TV, it's a regressive approach. And who would detect tax fraud or evasion without the IRS? What would happen to your finances if the IRS were abolished? We're going to explore that question today. The Internal Revenue Service, or IRS, has been in charge of collecting federal taxes from citizens for more than a century. It's a word that can cause anxiety. Therefore, it should come as no surprise that discussions of dismissing the tax collector and abolishing the IRS completely generate intense controversy. What would that genuinely imply for your finances, though, if it did occur? Let's first zoom out and examine the purpose of the IRS. The IRS essentially serves as the piggy bank manager for the federal government. It collects taxes on your income, business profits, and even investments every April. The funds it collects support the government's operations, including national defense, social security, schools, highways, and yes, even the upkeep of national parks. Eliminating the IRS would shake up the entire system, but it wouldn't necessarily mean doing away with taxes. Suppose the IRS disappears overnight. No more tax returns. No more audits. That sounds fantastic, doesn't it? However, it's not as easy as clicking delete and keeping the money you would typically pay to Washington. A drastic simplification of the tax code is one possible outcome. There are several possible outcomes. In place of an income tax, some politicians suggest a national sales tax. Others propose a flat tax, in which all taxpayers pay the same proportion regardless of their income. The system would need to be simple and easy to implement if the IRS didn't enforce the intricate web of tax laws. What could you possibly gain? Let's begin with the financial advantages. First, the cost of compliance would most likely go down. Each year, millions of hours and billions of dollars are spent by Americans trying to figure out how to properly file their taxes. Tax season is not only unpleasant, but also costly due to the need to hire accountants, purchase software, and sift through documentation. You would spend less time and money organizing your returns if the procedure were simpler. Imagine paying while you shop at the grocery store, or even managing your taxes with a few clicks. Second, the biggest cause of tax time worry, the prospect of audits, would vanish if the IRS was abolished. More peace of mind and perhaps fewer gotcha punishments for sincere errors result from that. Lastly, a more equitable, open, and straightforward approach might theoretically close gaps. The ultra-wealthy and large enterprises will have less leeway to evade the law if everyone pays the same. At last, you may feel as though you are playing on an even playing field. Now for the less enjoyable aspect, the possible financial drawbacks. One significant risk is that tax collection will become chaotic if the IRS is eliminated without being replaced by a very effective alternative. Unpredictable changes in public services may occur if the government is unable to collect taxes consistently. Keep in mind that roads, public safety, and disaster relief are all funded by taxes. States or local governments may attempt to make up the difference with their own taxes if that funding stops coming in. This is sometimes less effective and could be more costly for you. Another disadvantage is that a one-size-fits-all approach, such as a flat tax or national sales tax, may disproportionately affect Americans with lower and moderate incomes. For instance, you would pay more each time you made a purchase under a national sales tax, and if you don't have extra money to spare, those purchases would take up a bigger portion of your monthly budget. Even though the same flat percentage might seem fair at first, losing 20% hurts far more if you're making $35,000 than if you're making $350,000. The danger of widespread tax avoidance also exists. In the absence of a centralized organization to monitor individuals, some people and businesses may simply fail to pay their debts, shifting expenses to others who do. That would imply that the government would raise taxes in other places, perhaps in more covert ways, by slipping additional expenses into payroll taxes, utilities, gas taxes, or property taxes. Important tax perks and deductions might also go, along with the yearly stress of IRS correspondence and tax deadlines. Tax advantages for charitable contributions, education credits, and mortgage interest deductions may disappear. You may need to reconsider your financial approach if you have been depending on those to reduce your tax liability. So to explain the question of why people pay money to the government and what happens to that money after you do. The majority of us dislike having to forego a percentage of our income or having sales tax applied to our purchases. However, in the majority of nations, paying taxes and other government levies is a normal part of daily life. What's the point then? Let's begin with the fundamentals. Governments levy taxes and collect revenue to pay for the various services and infrastructure that sustain civilization. Consider taxes as the price that everyone must pay to live in a community that has parks, public schools, libraries, roads, and police forces. None of these things would exist if no one helped. Supporting hospitals, emergency responders, and immunization programs takes up a significant portion of the majority of national budgets. Another important aspect is education, which includes maintaining university campuses and paying instructors. Your taxes pay for social safety nets, courts and law enforcement, public transportation, scientific research, the military and national defense, and more. At the municipal level, your city or regional government may use a portion of your funds to repair potholes, construct sidewalks, fund local museums and theaters, or ensure that firemen have the supplies they require. The fundamental principle is still the same, though. You pay the government because it enables society to provide infrastructure, protections, and services that no one person could give on their own. The next time you see that deduction on your payslip, you'll realize that you're contributing to the modern world rather than merely losing money. Next, I want to speak about how there are different taxes people have to pay, and they don't really realize all of them that they are giving their funds to. Part of fully understanding how to budget your way to financial wealth is understanding the taxes that you pay. While income tax may monopolize our tax conversations, don't be misled. Taxes fundamentally shape virtually every aspect of our financial existence. Consider this. You're likely confronting at least 10 distinct tax categories right now, each strategically designed with specific goals, complex regulations, and significant financial implications. Understanding this tax landscape isn't just helpful, it's essential for your financial well-being. Let's tackle the tax we all know and love, or not: income tax. Almost everyone understands this one. The government gets a slice of every dollar you earn through work or business. Most countries use progressive systems, meaning the more you make, the bigger percentage you contribute. Ever wonder where those funds go? They're funneled right back into your community through social services, schools, and those roads you drive on every day. Beyond income taxes lies another crucial financial obligation: payroll taxes. Don't overlook these significant deductions that appear on your paycheck, as they directly fund the social safety nets we all rely on: public health care when you're sick, unemployment benefits during job transitions, and social security for your future retirement. What makes these taxes particularly important is their shared burden. Both you and your employer contribute, creating a collective investment in societal well-being that benefits everyone. The third is value-added tax. You know it as sales tax or VAT. Ever notice that extra bit tacked onto your bill when buying groceries, clothes, or just about anything? That's the sales tax at work. Though the store rings it up, every penny of that additional charge flows straight into government coffers. Homeowners, listen up. Property tax is that yearly bill based on what your home, apartment, or land is worth. Think of it as your contribution to those neighborhood perks you enjoy, the local parks, schools, and firefighters who show up when you need them. Ever sold stocks or real estate for more than you paid? That's when capital gains tax enters the picture. The government sees those profits as money making money and wants its share, especially since these gains tend to stack up nicely for folks with deeper pockets. The business tax is another large tax bucket. This is a tax on business earnings rather than personal income. Before distributing dividends to shareholders, a corporation usually pays a portion of its profits to the government. Of course, businesses employ a variety of tactics to lawfully lower this tax, but that is a topic for another article. Next up, we have excise taxes. They are occasionally referred to as sin taxes. These are unique levies imposed on specific goods, usually to deter consumers from using them. Excise taxes are typically applied to gasoline, alcohol, and cigarettes. Sometimes the tax is mentioned on the receipt, and other times it is concealed in the price. Although they are not as prevalent in daily life, estate and inheritance taxes can have a significant effect. A portion of a deceased person's money or property may be taken by the government before it is distributed to the heirs. Even from one state or nation to another, the rate and the regulations can differ significantly. The tariff, which appears whenever a commodity crosses international borders, is still another type of tax. In essence, tariffs are levied against imports or exports. For instance, the government may have collected duties when the car entered the country, which could account for a portion of the price you pay when purchasing an automobile manufactured elsewhere. Then there are registration and license fees. The money you spend to lawfully operate a business, obtain a fishing license, or renew your vehicle's registration is included in this bucket. Although they don't often appear to be taxes, they are actually a means for governments to collect money in return for giving you specific authorization to do something. In addition, there are additional taxes that are hidden throughout the system, such as stamp charges on real estate transactions, hotel taxes for your next trip, and even taxes on lottery winnings or airline tickets. Additionally, some jurisdictions impose an annual wealth tax, which is a tax only for possessing substantial wealth or assets. Therefore, keep in mind that taxes are present everywhere, not simply on your earnings, the next time you glance at your paycheck or store receipt. One tax bucket at a time, governments have come up with innovative ways to keep their systems functioning, from the time you buy your morning coffee until the day you pass on your estate. Understanding these various buckets, whether you perceive them or not, demystifies a significant aspect of society's operation and demonstrates the variety of ways in which we all contribute to the common good. Furthermore, even though nobody enjoys talking about taxes, it's always worthwhile to understand where your money is going. So where do we go from here? Let's be real. Abolishing the IRS outright would require Congress to tear up our tax code and start from scratch. Not exactly a small task. The controversial options on the table include: picture this. a national sales tax or flat tax, reshaping our entire revenue system. These alternatives would require brand new methods to collect, track, and enforce tax compliance. Imagine shopping in a world where some proposals would have taxes automatically deducted the moment you tap purchase through an entirely digital system. Second, let's reimagine the IRS. Trim it down significantly but preserve its essential functions. This slimmed-down agency would focus solely on investigating serious fraud cases, processing payments efficiently, and actually helping taxpayers navigate the system. Think of it as an IRS that's been put on a diet but kept its muscle. Third, we must reform our tax code to create a system that's not just fairer, but genuinely user-friendly, preserving the IRS while freeing millions of average Americans from unnecessary bureaucratic burden. Estonia has already proven this is possible, having revolutionized their approach through strategic digitization and thoughtful simplification. Isn't it time we delivered this same relief to our taxpayers? At its heart, the IRS abolition debate isn't just about paperwork. It's about our vision of America itself. How big should government be? Who should pay what? And who's really carrying the heaviest load? While politicians love the applause line of scrapping the IRS, the reality remains distant. Yet every tax season reignites the conversation, and for good reason. Whether you see the IRS as your necessary financial guardian or an intrusive bureaucratic monster, the decisions we make about its future will hit both your wallet and your worldview. No American will be left untouched. Think about it. Abolishing the IRS could sweep away countless headaches, confusion, and those tedious administrative expenses we all dread. But there's a flip side. It might trigger a cascade of financial challenges, especially if you count on tax breaks or have a modest income. Will your wallet thank you for the streamlined simplicity and lower compliance costs, or will it feel the squeeze from unfamiliar tax forms and diminished public services? Sure, a world without the IRS might sound like a dream come true, but let's consider the full picture. There's always a trade-off, and those benefits could actually outweigh the drawbacks. You might keep more cash on April 15th, but what about your financial well-being during the other 364 days? Now that's the question worth pondering. Hey, that's it for today. Go ahead and leave a comment below, and don't forget to hit the like button, share this video, and subscribe. Thanks for watching. Until next time.